Welcome to Bunnex Investment Group. In this video, we will talk about a simple market maker strategy called the EMA strategy. We'll review all its parameters that are simple to follow as well as executing. Please be sure to be part of our free signals Telegram channel. I'll leave the link in the description box below. And if you are meeting us for the first time, consider hitting that subscribe button and check the notification bell icon so that you won't miss any of our quality content that we upload every time. So here's the strategy explanation. Market makers are different from us retail traders. They cannot just press buy or sell button like us. They need to build up some liquidity for their contracts to be filled. By contracts filling, we mean if they press buy or sell, for the trade to go through their trading terminal, it needs enough liquidity since they have access to large amounts of capital. So when they enter into positions, the market responds by sharp spikes or fast moves, and when they close, the demand of the held currency drops. We are saying the impulses on the upside or downside that we see on the charts usually are an indication of their involvement in the markets. If they press buy and manage to fill their contracts, you'd see the market actually making a fast move to the upside. And when they close some of their trades or all of their trades, we will see the demand of the held currency dropping and resulting in a price pullback. Usually after price drops, they add more positions, and these are the points we are interested to get involved in the market. So here's the strategy definition. This strategy is very simple, that any trader, no matter which stage you are in your learning cycle, it uses actually 4 EMAs, which are 13 EMA. By EMA, we refer to exponential moving average, 50 EMA, 200 EMA, and 800 EMA. So basically, we are saying the 13 EMA is the signal line, 50 EMA is the peak locker, 200 EMA is the baseline, and 800 EMA is the resetter. So these are basically big words for nothing, and you actually get to understand each of them as we go within this lecture. The first step is to see 200 EMA crossing 800 on the M15 time frame. So on my charts, I'm going to show you there will be a 13 in red, 50 in blue, 200 in white, 800 in dark blue. So basically we are saying we need to see a 200 EMA crossing an 800 EMA. This actually tells us that the higher time frame cycle has actually locked, right? This also signifies injection of funds by the market makers. Mind you, we are not trading with these indicators so that they can predict the market for us, but they are simplifying how we see the points of demand drop. Price should then retest the 800 EMA as evidence of market reset. We are saying on that same M15 time frame, you've seen 200 crossing 800, and on that same M15 time frame, you are now seeing 50 EMA, actually the M15 time frame coming to retest the 800 EMA. Then when price comes from the 800 EMA, it creates what we call a valid peak. So peaks are reversal points that are available to us on the charts, and we are saying they are very difficult to catch. But if it is coming from the 800 EMA, we are saying it's almost a guaranteed peak reset. So basically we are saying M15 should first retest the 800 EMA. From this validated peak or the 800 EMA, we need to see it locking by a 50-200 EMA crossover. When price pull back to the 200 EMA, we wait for entry confirmation, and the entry confirmation equal candlestick reversal pattern at the 200 EMA. So the candlestick reversal patterns are bullish engulfing, bearish engulfing, hammer, shooting star with their confirmation candlesticks, or even seeing a candlestick closing above the 13 EMA. So here is the illustration of what we are trying to put across. This dark blue is the 800 EMA. This white one is the 200 EMA. This light blue is the 50. This red one is the 13 EMA. So the crossover of the 800, 200 actually occurred way before this happened. Then we've said we need to see an M15 retest to the 800, which is this one, right? Price came to the 800 EMA. After price came to the 200 EMA, the second thing is now to see the reset peak lock by a 50, 200 EMA cross. Then after that, we need to see a candlestick reversal pattern. In this particular case, there was a railroad track at the 200 EMA. Our stop loss is going to be 25 pips. Our take profit is going to be 50 pips. So basically, this is the illustration of this war strategy. So let's now have market examples. But before we do so, let's memorize the strategy in this simple way. 1, M15 E800 EMA retest, right? Which is the same as peak reset. We are saying C M15 retesting the 800. Then 2, C the 5200 EMA cross. Then 3, C candlestick reversal pattern at the 200 EMA. Then enter without fear. Then stop loss at 25 pips and target at 50 pips. These are 4 easy steps to memorize so that you can actually retain it when you get to the charts. So the first example is actually coming from NZDJPY that occurred on the 1st of March 2023. I've put these dates so that you can even go back in history so that you can see this on live charts. We actually can see that the market was actually at the 800 EMA. It was not as perfect as we would expect it, but the market was chopping at the 800 EMA. Then candlestick, then 5200 cross. After 5200 cross, meaning this wall structure had logged in the upward direction, impulse, then pull back to the 200. Enter at bullish engulfing pattern, which is at this point. Stop loss 25 pips, target 50 pips, like that. The second example was on USDJPY. On this particular case, we can see the market actually coming from the 800, M15 retesting the 800, then 5200 EMA cross as peak lock, then enter at bullish engulfing pattern. I've actually put these figures so that we can see clearly that it was 50 pips target that was reached. The price came from 136.429 and ended at 136.967, which was enough to hold our target. Our stop loss below, which is 25 pips below our entry. So the last example, it was on pound, and it occurred on the 17th of March 2023. You can go back in history to see it on live markets. We had retest of the 800 here, and then after that crossover of the 250, 200 EMA, and then retest of the 200 EMA. Then we enter at railroad tracks, which is this one, our entry above this, then our exit at 50 pips, stop loss below with 25 pips. So basically that is what you'll be looking for. And I always say Forex is a system designed by smart people to transfer wealth from the impatient to the patient. So always be on the right side. We have a daily Zoom market analysis that goes for $50. It can actually help you analyze the market, as I'll be going through and giving you a daily watch list to have for every particular day. On that note, we come to the end of this video. Thank you for watching and see you on the next one.